Welcome to the American Cash Flow Institute's video training sessions. Series 1 contains scenarios for the cash flow professional, demonstrating presentations to a banker, accountant, real estate agent, attorney, portfolio prospect, and a funding source. Series 2 is a compilation demonstrating negotiating with a note seller, converting a factoring prospect, converting a note prospect to a note seller, and negotiating with a note buyer. These scenarios have not been scripted. They're played by actual cash flow brokers and funding sources presently working in the industry. Those playing the role of the broker are sharing with you the presentations they've used to create success in their own businesses. All are very successful working cash flow professionals, as well as visiting instructors at the American Cash Flow Institute. These are typical examples of what you, as a new broker, can expect to encounter. We recommend that you view each scenario first, then refer to your study guide and follow along again with the videotapes. Review very carefully, taking notes for later use in your own presentations and negotiations. These are presentations to common referral sources. Please keep an open mind regarding other referrals that you may not have thought of as referral sources yet. Presenting your services to a banker. Jeff Callender of Express Business West plays the banker, and Richard Shapiro of Condor International presents as the broker.
Morning, Jeff. Hi, Richard Shapiro, Condor International.
Good to meet you, Richard.
Thank you for taking a couple of minutes to meet with me this morning. I did notice that out in the lobby you have a plaque there that you sponsor a Little League team.
Yes, we've done that for the last few years. The team did real well this year.
And I bet your son is the star of the team, of course.
Well, I don't like to brag about it, but yes.
Of course, spoken like a true proud father. Anyway, I just want to take a few minutes of your time to introduce myself, tell you a little bit about the services that I provide. I'm a factoring broker, and we provide alternative forms of financing, primarily through the purchase of accounts receivables, invoices, which is known as factoring. As you all know, with factoring, what we do is we don't make loans, so we're not in competition with you at all. This is a complementary service. What we do is we purchase the assets of a business. The particular assets are the accounts receivables or invoicing. And what we do is typically the advance on that would be in the range of 70 to 80% of an invoice amount. So somebody has an invoice for $100, we would be advancing them 70 to 80%, $70 or $80. And once the account is set up, this is done on an ongoing basis. Funding can happen almost overnight, as opposed to a situation where someone comes in and asks you for a loan, which can take weeks, I imagine. Isn't that correct?
Oh, at least, yes.
So this would be kind of an interim financing for them. And the reason why I say this is a complementary service, because we don't supply them with any kind of banking services that you traditionally supply them with. We don't give them a checking account, we don't have a savings account for them, and we don't make loans, as I've already mentioned to you. But what this does is it takes a client of yours that may not be bankable or is asking you for something that you cannot do. They come in, they request money from you, maybe it's payroll at the end of the week. We can take care of that by turning some of their paper assets into cash assets. As I said, typically we charge the advance is 70 to 80%, and then later on when we collect, assuming let's say that it pays off in a 30-day, because most of these are net 30 invoices. When we collect on it, then we rebate back to the client the difference. In this case, just as an example, we'd use a 5% fee, nice round number. So the client nets 95% on that particular transaction. And the other services that we provide for the client is that we will do collection for them, and we will report to them, give them reports on their aging. And so it's a service that is it has a number of facets to it that will help the client.
So you mentioned that you can service clients that I can't provide loans for.
That's correct, because we base the funding to them not on the client's creditworthiness, but on their customer base. So if they're doing business with a good customer base, people who pay their bills, maybe pay a little bit slower than what they would like, but do pay, those are the kind of accounts that we like to see. The client themselves could have trouble. They could have a recent bankruptcy. They could have no credit. We work with a lot of startup companies. We start up with a lot of growth-oriented companies. It could be a company that has outgrown the credit line that you might be advancing. I mean, maybe you're not comfortable at this point in increasing that credit line.
Well, I can see how that'd be a good advantage. I've, you know, unfortunately have to turn people away quite often that come to me for loans, and it'll be nice to have somebody to refer these. I do have one other factor on the other side of town that I refer deals to sometimes. Tell me what would be my advantage in working with you?
Well, the major advantage with working with me is that I am a broker. I don't represent any one factoring company. I have access to over 150 factoring companies throughout the country. The factor that you deal with right now, I'm sure, services their clients very well, and I'm sure they're very good people, but they may not be able to service all of your clients. There are some factors that will not touch medical receivables. There are others that specialize in medical receivables. It may be also, in terms of the customer base, there are some factors that will only work with a customer's funding based on their creditworthiness, whereas there are others that will work with a variety, B and possibly even C, as the payors. So as a broker, I know which factor to take a particular client to, depending upon their needs. There's also some volume requirements. Most of the national accounts want to see volumes in the neighborhood of 20 to 50,000 as a minimum to start. However, I do have access to me some that will do as little as 5,000 or 10,000 a month in business. So the service that I provide, and it's at no additional cost to the client, is to find a match, the right factor for a particular client.
So it sounds like what you're most concerned about are the customers of the client.
That's correct. As far as...
I'm going to be looking for the creditworthiness, of course, of the client, but you're looking at the customer more.
Right, right. What we're looking for are businesses as clients who can perform. We want to see that they're able to fulfill on their contracts and get to the point where they have an invoice. And we work with both service companies as well as manufacturers, import, export. Just about anybody doing business today can be factored.
Doesn't matter the size of the business.
Doesn't matter the size of the business. As I said, there are some minimum limitations as far as the amount of invoicing that some companies would like to see. But because the field in factoring is becoming competitive, the more competitive it becomes, there are factoring companies that are carving out niches for themselves. And so whereas before you couldn't find anyone doing under 20,000, let's say, there is now a niche market in the $5,000 to $20,000 range.
Interesting. I was just talking to a fellow that came in about a week ago who does work on his own for a very big local employer. You'd know their name. And that might be something that you could help him with. I couldn't help him.
Well, I would love to have that as a referral. Jeff, if you don't mind, I'd like to leave a brochure, a little bit more information about what I do for people, if you don't mind keeping that on hand, and I'd love to hear some referrals from you at some point.
I think I may have one for you.
Well, I'd love to hear about them.
I'll give him a call and have him get in touch with you.
Thank you very much.
You bet.
Presenting your services to an accountant. Bob Richardson of First Capital Group plays the accountant, and John Brandon of Brandon Funding plays a factoring broker.
Morning, John.
Morning, Mr. Lewis. Good to see you.
Same here. So visiting with Andy Jones last week at the Rotary Club, and Andy had mentioned that you have some services that might be of interest to some of our clients, so I welcome the opportunity to have you come in today to kind of go over just exactly what you do and how some of our clients may get involved.
Great. Yeah, Andy and I are big friends. Actually, we went to grade school together, we went to college together, we're fraternity brothers, and actually I used to go out with his sister in college.
Oh, good.
So we're pretty good friends. Basically what we do is we provide working capital to companies.
Okay.
We boost up their business with actually cash.
Well, that definitely would be of interest to several of our clients right now.
All right. Well, tell me about your clients.
Well, our clients range anywhere from manufacturers that have been in business for 30 or 40 years to companies that are in the high-tech industry. Some of the companies we're dealing with right now may have only been in existence for a couple months, developing software for special market niches for the printing industry where they've got all kinds of receivables built up, but unfortunately they just don't have the cash in the bank to go and take care of meeting some of the obligations that they have to meet.
We found that most companies have more money on their books than actually in the bank.
That's true.
Which stagnates their growth and can actually hurt their business. What about if I had a way that would unlock the money that's held up in their books and release that money into their business?
I think that'd be great.
Really?
We've got several customers that'd be very open to that right now.
Right. Well, as you know, most companies are always waiting on their money. They're watching the mail for the checks to come in from their customers. And these slow-to-pay customers are actually hurting their business.
Yeah, we found that some of the slow-to-pay customers are the big people, the Fortune 500 people, and those are the ones that some of our customers like to get on their customer list.
We found that a lot. Well, what we do is we actually buy their accounts receivable. It's called factoring.
Oh.
And what we'll do is advance money that's owed to them. So we'll advance their money, provide immediate payment on their invoices. So and advance their money within 24 to 48 hours. And then when their customers actually pay, we'll refund them the 20 to 30% we held back, minus a fee.
That's excellent.
So it lets them actually do what they started their business to do, is grow their business, not wait for money to come in.
And what's the procedure? Is there an application that has to be filled out? How do they get started?
There is an application which actually will find out a little more about their business, about your client's businesses. Accounts receivable aging report helps a lot to find out when their customers actually traditionally pay, and the actual volume of business that their customers are doing monthly. And it can really be a boom for your business too, because it can increase their loyalty to your business.
That's excellent. Yeah, we built our business based on a lot of personal service, and that's very important to us. On the application process, on the initial application, how long does that normally take?
Well, actually, to get a company set up, what I say is usually within 10 to 14 days.
Okay. And so you actually go and purchase the invoice and advance money against that invoice.
Right.
Okay, once they're set up, how long a time frame from the time they get an invoice to the time they actually get money, once they're set up?
Usually within 48 hours.
Okay, that's outstanding. And you provide the kind of the collection function as far as those particular invoices are concerned. So I assume then that there's some benefit on our customers' side that they don't have to go and do or place so much emphasis on the accounting function within their business. Is that valid?
Right.
Okay.
Right. It does do a lot of that. Sometimes it can reduce their size of their collection department.
That's excellent.
Which is another benefit. It releases their cash in their business where they can take advantage of the discounts that their vendors offer.
Now,
and protect their credit rating because they're going to pay their vendors quicker.
That's excellent. Now, we've got a couple of clients that are in some relatively sticky situations right now. We've got one that unfortunately is in a bankruptcy situation. Then we've got a couple with some tax liens and tax situations that we need to have resolved. Are those types of customers that you'd be interested in as well?
Oh,
taking a look at?
Those are problems that don't ever kill a deal.
Okay.
Work through those.
Okay.
And I just appreciate you using me as a referral source.
Okay, we'll be happy to. And I think what I'd like to do is, we've got a couple of customers that are clients that come to mind right now. And what I'd like to do is prioritize those clients based on sense of urgency. I will make a call to them and tell them that they'll be expecting a call from you. And then, if there's anything else that you need, just feel free to give us a call, and then we'll prioritize some of the other ones that might be of interest to you as well. And then, why don't you stop in every now and then, we kind of go over different aspects and maybe see if there's some other areas we may be able to work with.
Another good benefit actually is because when I go talk to business, I'm really into their business, and the first thing I hear about is either their banker or their accountant. So I can actually refer business back to you too.
Okay. Well, we appreciate it.
That sounds great. I'm going to leave you some business cards, and we'll talk further later.
Okay. Thank you very much.
Thank you very much.
Presenting your services to an attorney. Howard Levitan of Diversified Cash Flow Specialists plays the broker, and Jeff Goodman of RSR Capital plays the attorney.
Good morning, Jeff. Nice to see you.
Good morning. How are you?
Hi, my name is Howard Levitan, and My business is called Diversified Cash Flow Specialists, and I appreciate your giving me a few minutes of your time this morning to let me tell you how my business can be of assistance to your clients. Do you mind telling me a little bit about your practice and what you do?
Sure. We're a 45 attorney law firm here, and we're a full-service firm covering everything from bankruptcy to divorces. I have attorneys that handle things in the area of real estate transactions, settlements, like I said, matrimonial work. We do specialize in some tax and bankruptcy areas, but we basically cover it all.
Can you tell me a little bit about your specialty?
And my specialty is in the area of bankruptcy practice.
Well, we can help you in your area as well as in all of your compartmentalized areas in the law firm. Do you have a computer network?
Absolutely.
Well, after we get finished with talking about what we are, the services that we have available, I'd like to suggest to you and would really feel honored if you would allow me to put something on your computer network about the full phase of our business. In your particular area of bankruptcy, I presume you handle Chapter 7s, 11s, and 13s?
Correct.
Well, every once in a while you're going to have that individual who walks into your office needing to file a Chapter 7 bankruptcy, who will have that unique little asset that needs to be sold before that bankruptcy could be filed. Otherwise, they've got to abandon it to the trustee.
Absolutely.
We can help you sell that asset and create that asset, create cash out of that asset, which provides money to pay your fees as well as to take any excess money and put it into an exempt asset. This is a much better alternative to just turning it over to the trustee and losing it. Do you ever come across that type of situation?
All the time. Could you give me a little explanation of how that would work?
If when that individual comes into your office and you do your preliminary work in putting together their assets and their liabilities, obviously you're going to know when they have an asset that is a non-exempt asset. If you can just give me a call and put me in touch with your client, or I will be happy to meet with your client here in your office to go over that asset and determine just what it is that I need in order to figure out what it is worth, what the asset is worth at that particular point, and the types of documents that we'll need to convert it to cash. Our process is very quick. We do provide immediate service. It's anywhere from a 5-day to 10-day business day situation in converting that asset to cash. Once it's converted to cash in an arm's length transaction, we don't have to be concerned about the priority issues. And after that's done, you go ahead and file your bankruptcy. Your fees are paid. They may make some advance payments on their mortgage or put it into some other kind of exempt asset, and that asset then works to their benefit.
Well, let me ask you, could you give me an example of one of these situations in Chapter 7? Just take me a little step-by-step in a nutshell through how it works and how you look at things, what type of paperwork or documentation might be involved.
Absolutely.
And what my client really needs to know in order to work with you.
I was referred last week to a mortgage note that was being held by the potential bankrupt, the debtor. It was a small one, but obviously not an exempt asset.
Okay.
We sat down and we reviewed the terms of the note, the position of the note, where it stood in terms of payment. We were able then to look at the note, the mortgage, the title policy, the insurance, hazard insurance in place on the property, the amortization schedule. We were able to verify the balance due, and based upon the yield factors, we were able to make an offer for that mortgage and close it within 5 days.
Okay.
We've closed numerous other types of transactions on the bankruptcy level. I purchased a stream of insurance commissions.
Well, let me ask you, while you're on that subject, could you tell me a little more detail about what you could do with the Chapter 11 and Chapter 13 workouts? Because we have a strong client base that would fall underneath those guidelines. How could you help them?
Very good. The Chapter 13, as you know, is a wage earner plan filed by an individual debtor, and oftentimes that debtor might have an asset like a structured settlement or another asset that can be converted to cash to make that plan work, to help fund that plan and to get it approved by the court. The nice thing about the structured settlements and other types of cash flows is that you don't have to sell the whole cash flow. You can sell a portion of it to meet a specific need as it arises. In the Chapter 11 business reorganization arena, we can provide funding for companies whose banks are no longer interested in working with those companies. If they're in the manufacturing or creating any kind of business receivables, we can provide for them a factoring relationship which provides them ongoing working capital so that they can stay alive, they can meet their needs, grow, and satisfy the plan, the reorganization plan that they have filed with the court. In addition, we have sources available to us who can provide refinancing in real estate on the cram down of their building. And you know, most people don't know what a cram down is, but that's obviously when the amount of equity in the building is less than the amount of the loan, and a motion is filed to bring the values into play.
Sure, we see quite a bit of that.
Okay.
Do you have a problem getting any of this past the trustee or the court?
Well, obviously, everything is approved by the court, and we're bringing legitimate lenders and factors to the court for their approval. And with total court approval, the lenders and the factors move into a priority position, which gives them a sense of strength. The amount of opportunities available for you in the workout or bankruptcy area are immense. I brought with me today a folder which helps explain to you all of the different areas that we have available to us in the cash flow industry, and how we can work with you in helping your clients. Obviously, each of your divisions in your law firm will have a different interest, but we can help in the matrimonial area and the domestic relations area by purchasing second mortgages on divorce liens.
Yeah, we're seeing that right here. That looks very interesting.
Well, it's an extraordinarily interesting area of the cash flow industry, but because it helps bring a closure to what might be a very hotly contested domestic matter, where the man walks away with nothing more than a lien in the real estate to be satisfied at a period in time. He's upset because he doesn't have any money. He doesn't participate in any of the growth in the real estate. But we can get him some cash today and bring that relationship to an end. That satisfies not only him, it satisfies his ex-spouse, it satisfies the divorce lawyers, and it satisfies and makes the judges very happy.
Yeah, I think the courts would appreciate something like that.
And in the area with your personal injury division, we obviously work with structured settlements. Structured settlements are created for a specific purpose at the time they're created, but things just don't remain in a constant state. And what may be the situation today may not be the exact same situation 5 or 6 or 7 years ago.
Sure.
And we've worked with structured settlement recipients who have the need for some cash to invest in a business, to do something which has some meaning for their particular life. And again, we can raise cash. It doesn't have to be an all or nothing situation. It can be a partial, which are oftentimes very handy, and provide them the cash that they need. As you can see, Jeff, the opportunities are immense. And one of the things that I would like to do, and after you have a chance to review the information, you may find this appropriate. I can set up a luncheon meeting for the members of your firm or the heads of your particular departments. Come in and spend a half hour's worth of time talking and working with all of them how we can work within your organization and provide them assistance. I realize that this is not something that you're going to deal with every day, but as long as you know we're out there and that we can provide the assistance that would be helpful to your clients, then I'm satisfied, and I know that you will be satisfied with the results that are provided.
Great. I think somebody see here about going on the network. You'd mentioned earlier, might have you speak to somebody in our information tech area. What exactly would you want to put on our network? Because our attorneys can be a little picky about what's floating around on the system.
Absolutely, and nothing would go on the network without some prior approval.
Right.
I take no pride in authorship, although I think I write very well. I'd like to provide the different areas of your firm with a synopsis of what services are available, and have them have that opportunity to know they can get a hold of me and we will promptly respond to their needs.
Great. Let me review this information, pass it by with the other people in the firm, and then we shall talk.
Can I call you in about a week?
Absolutely.
All right. Thanks
Howard,
a lot for
thank
your
you
time.
Thank you for coming in.
Presenting your services to a portfolio prospect. Larry Singer of Capital Funding Group plays the broker, and Bruce Benton of Colonial Financial Services plays the business owner.
Larry, it was good to see you at the Chamber of Commerce luncheon on Tuesday.
Well, it's great seeing you too. I was glad you said something. At least I knew
bet.
somebody was listening.
You bet. I enjoyed what you had to say about buying accounts. Can you tell me a little bit more about what you do?
Well, it's interesting. We got to specialize in buying groups of accounts, and a lot of people didn't realize that you could really do that. We'll buy groups of automobile loans, whether it be real estate notes, delinquent debt, accounts that some are paying you, some accounts don't pay. And we've gotten into buying them in groups rather than strictly as one at a time, like if you were buying a note and so forth. So it's been good. What part of that struck a note with you?
As you know, I run a bail bond company, and we have some accounts, and it just occurred to me as I listened to your talk that this might be something we could talk about. And what information would you need from me to see if this fits?
Well, are these bail bonds that are performing now that you're actually getting money from, or are these ones that you kind of on the back burner and they're just sitting there and you're not getting anything from?
I have some, Larry, that date back to like '94 that we've tried to collect. We've even let a collection agency try on some of those in 1994.
Sure.
Haven't had a whole lot of success, but I'm just looking for some answers on this. So.
Sure. So you have them in grooves from different years, and do you have it on computer disks that they're able to take a look at?
We keep a spreadsheet. In fact, I may have a file here. Let me see what I have. We keep it on a computer spreadsheet that identifies the person that had the bond with us, the last address we had for them, and the amount that they owe us. And we also have their attorney, if they had an attorney in the situation.
Great. Well, let me ask you a couple of questions, because it sounds like something that might be able to help you out with. Do you have any idea like how many you have, the value of how many each year or this year right now?
Let's see, Larry. Let me just see. It looks to me like we have 190 accounts.
What date would that be? Would that be for this year, for a couple of years, or?
May have to do some figuring on that for you, but I think on average we have about 250,000 that go delinquent on average each year.
Okay, so that would be like for this year, and if you have that, you probably have that for back years, 3-4 back years from there?
Right. These go back to about '94.
Okay.
And it looks like the total of these is somewhere in the, well, let's see the bottom number down here, $1.3 million.
Okay.
That's what I have total right now.
Great.
But,
so if you've got that, I mean, so do a couple quick calculations here. If you've got that for those 3-4 years, we're looking at probably somewhere around 900 accounts totally for that number of years.
yeah, that's right. Let me check again. Yeah, that was just one part of it. Yeah, here's some more. Yeah, 950 would be about right. I have 950 accounts.
Let me ask you something else. Are they all in your area? Are they all from this state? Or are they from different states? It would be important to know when we want to take a look at how collectible they really are.
Most of them are in this state and some of the adjacent states. Most of them right around in this area.
Okay. Do you have any idea, you had mentioned before that some of them went to a collection agency. Did all of them go to a collection agency, or was just some of
No,
them?
I tell you, we just get so busy. I got a little bit of time last summer,
Sure.
and ran into this collection agency, and we got, I'd say about 10%, but that just didn't really seem to get the results we were looking for. But
Terrific. So if you've only got 10%, that means you've done some collection inside, I would think, to try to collect this?
What we do, we have a standard letter that goes out first, and then if we don't get a response in a few weeks, we have a little bit more harsh letter, and in fact, Sally on my staff here makes a couple of phone calls, but we're finding a lot of times where they've moved or we just can't locate them. And
great.
We sure could use some help.
And out of all those, because you're so busy and so forth, you really never send them to another collection agency, so you really send them.
We just get so busy with our ongoing business, they just sit there and, you know, I look at that file every once in a while and wonder what I could do about them. So
one of the important things when you try to do anything like that is, what do we have with their signature on? Do we have anything documented that would say, you know, you really owe this? What kind of documentation is on that?
Most of the time what we do, Larry, is we have them fill out an application, and that's where we get their basic information. And they've signed a promissory note promising to pay us. Sometimes we're able to get some security, whether it's some personal property. In very rare cases we have some real estate, but it's a mixture of...
Yeah. So you know the promissory note is backed up by something? I mean,
sometimes it's not.
Okay.
It varies.
Okay, but everything that you have there is you have the attorney's signature along with the client's signature, and then you have their current address at the time, and I would think if they haven't showed up, that address may or may not be good.
That's right.
Okay. Well, what happens when we evaluate this, we have to really take a look at obviously the total amount. We have to take a look at how many times you sent it out for collection other than doing it here.
Right.
We have to look at how old it is, because they may not be at that address, and of course if they haven't done their obligations and so forth, chances are they may not be there. So that takes a lot of work involved as far as finding out where that current person is and so forth.
So what do you think? I mean, just kind of ballpark, what do you think?
Well, I would take it that if these are that old, you've probably written these off.
Well, we did. In fact, we do. That's our policy. We write them off after a certain amount of time. So.
Sure. Well, I'll tell you what I can do, because we do a lot of business. We have several investors who are interested in the non-performing, as we call them, the ones that are bad debt.
Okay.
They're dead, feet in the air, and we're gonna go and see if we can get them. However, with all of these things that we've been talking about, number one, that the addresses may not be good. We do have some collateral backup on it and so forth. We're probably in the range, when we talk about buying what we call delinquent debt, non-performing and so forth, we're probably talking somewhere in that maybe 1 cent to 5, 6, 7 cent range on the dollar.
Wow.
Now,
well, that's pretty stiff.
Yeah. Well, it's the type of thing whereas if you were going in and there was some flow there, have you got any records? Have they paid you anything on any of those? Is there some of that?
We do have a payment history. Sally posts the accounts whenever we do receive a payment, and sometimes they've tried to make a payment, but some of them we don't have any at all.
Well, the important thing, one of the really important dates that we need is if we had a record on your computer, if at all possible, if we had a record of the last date that they at least paid you something, that would be important.
Great.
Okay? So when we start getting the information from you, if we had that date and then we also had the date that you said, okay, we're going to charge it off. So I had some idea of really how long it has been before you tried to collect something and our conversation.
Sure.
That would be great. And what we'll be able to do is, once we take a look at that information, what we'll do is we will analyze it, take a real close look, check a few things out. The one thing I would need from you, this way you'll know we're not going to do anything without your permission, is what we call a sanitized list. I need a list. You can take the names out of it. That's what we call sanitized. Take the names out of it. Show me how many people there are, and I can get a date, the last date of pays, and the amount of money, and those items. And then I can get back to you with a real accurate. But I just wanted to let you know before we went any further, we are talking about that kind of
that gives me an understanding. How do you get paid? How do you work in the trade?
Well, the good thing about that is we have investors who we work with, and they take care of us on their end because they are looking for investments of this type.
Okay.
So when I give you a particular price, that's what you'll be getting.
I see. That's to me. I don't have to pay you a fee or anything.
You won't have to pay me a fee on top of that.
Okay.
So that's what we do with that. Now let me ask you one more question. Is if you have this amount from each one of these years, I would take it that this pattern may follow. Because what we'd like to try to do is if when we find an investor that would be interested in doing this, we'd like to work out something with you so that you can even count on, if these things are now 8 months old or it's 4 months after the last time we received any money, you now know you can just turn those over to us and we can get an ongoing relationship with you of purchasing that so that you don't really have to worry with it.
That sounds interesting.
Would that be something that would be worth
Sure, I'll look
considering?
into it.
Okay, great. When do you think you might be able to have a disc for me that we might be able to look at? As I said, it could be sanitized. I do
Sure.
not need the actual names.
Why don't you check with me next week? Give me about a week, and Sally will work on that for us, and give me a call, and I'll try and have that for you.
Great. I will do that. I'll give you a
Larry.
call.
Thanks for being
Okay,
here.
thanks a
for
lot.
coming in.
Thanks.
See you later.
Okay.
Presenting a transaction to a funding source. This presentation is a continuation of the portfolio transaction discussed earlier. Larry Singer continues as the broker, and Randy Levine of Global Funding plays the funding source.
Hi, Randy. This is Larry Singer from Capital Funding Group. Did you get that letter and memo that I sent you about that portfolio on the bail bonds?
Yeah, Larry, I did. Thanks for calling, and I was interested. I wanted to know more about that. In fact, let me pull it out. I'll have it. I'll take a look at it, and then maybe you can give me some information more about that.
That would be great. That would be great. You know, when we talked at the convention, I thought this would be something that would be really interesting to you. So let me just go over some of the numbers that I had given you.
Okay.
This is a bail bonds company, and they have a total of about $1.3 million in debt. That goes from 1994 right up to now, right up to 1997. The interesting thing about it is that they have had nobody collecting on it right now. They had a little about 10% of the accounts in 1994 were sent to one collection agency. They got very, very poor results. They decided to pull it back, and the company's been so busy that they really haven't sent the other portfolio to anybody. So I thought it might be something that you'd be interested in.
Yeah, Larry, let me ask you, what is the portfolio comprised of? Tell me how it breaks down.
Okay, most of it is New York. There's some Pennsylvania, a little bit of Connecticut. We've got, out of the total of 950 accounts, Randy, we've got about 60 accounts in other states other than New York State. And I've got a complete disc on that I would be able to send you.
Okay, so there's about 950 accounts, and it's a total of about $1.3 million, you said?
About $1.3 million.
And about 10% of that was collected through a collection agency, and the other 90%, how was that attempted to be
Actually,
collected?
the other 90%, what they did is they did some of it through their own company. They sent a postcard out, they sent a letter out, and then they went and just made 2 or 3 phone calls strictly from their in-house people, never even went to their attorneys.
Okay, good.
So this is real prime paper.
Larry, what is the collateral of the portfolio? Are these collateralized? Are they non-collateralized?
Well, the good thing about these, Randy, is they have 2 things. Number one, they have a signed application on all of the accounts that we're talking about. They also have a promissory note, and that promissory note is guaranteed by something. Some have bank accounts, some have real estate, but all of them are backed up by some type of collateral. And as I say, they look pretty solid. But obviously, since they're bail bond, we do have a little bit in there as far as are the addresses correct and so forth. And I know that you're pretty good on skip tracing those, so I thought it might be an ideal portfolio for you.
Okay, Larry, one thing you said that just really aroused my curiosity is the real estate notes. Approximately how much is real estate backed?
Well, out of the total 900 accounts, there seems to be about 200 or 300 accounts in there that have got some kind of solid collateral. To tell you the truth, we have not looked at that yet to see what the value of it, if there's any mortgages, if it's automobiles, if there are deficiency balances. We haven't got into that yet, but it is all down on paper for a review, and we actually have that on disc for you.
Okay,
so
because
you
obviously,
could take a look at it.
Obviously, if the people can't be found, the real estate collateral would be about the only collateral that I would really be able to give real value to. So that would become a very important number for me. So if we could get that information, that would be helpful.
That is not a problem.
Okay, good. And my guess is, Larry, well, let me ask a couple more questions. In terms of the last collections on these, do you have any idea as to when these were last collected?
We will have a direct accounting of not only when they were last collected on, if they've gotten any payments on it at all, but I'll also have the charge-off dates for you. So you'd be able to take a look and see just how old they are. The interesting thing is that the newer they get, the 1976s, 1977s, are pretty current because they just haven't had the time to work on them at all.
Okay.
The also positive thing with it that you may want to look at is that the average balances are all over $1,300. So there's a good range in there, and I think some good possibility for collection.
I like that because if they're over $1,300, if we have to do skip tracing, at least it can make it more viable to do so as opposed to smaller invoices. Larry, do you believe that the seller of these has a thought about the value that they're looking to get out of this? Because, to be honest with you, I have to share with you that as a result of the real estate being the only significant collateral, if we can't find these people, I can't pay very much for this. So the price range that I'd be looking at is probably the 2 to 6 cents per deal.
We did cover that with him, Randy, and what we also wanted to put in there for you was that we told the client that if this performs the way he thinks it might perform, and if we were able to get anywhere between 1 and 5 cents for it, and I've mentioned those numbers. He wasn't very happy about it, but he certainly understood what we were going to do. And if we were able to do that, and you had a good experience with it, we also have a potential here for a flow forward, where you would be able to write a first refusal on that you'd be able to get it each year if you wanted it. And it would be, obviously, to their benefit to give enough documentation on this so that you would be interested on an ongoing basis.
Larry, the way that I would want to proceed with this would be I would give you a conditional purchase agreement that would be conditioned upon my review for 20 days of the collateral. That can be, doesn't need to give names, it can be a washed list. At that point, my offer would then become a real offer.
That would be fine. Matter of fact, we told him that there'd be a conditional contract. He did say that we'd be able to get the disc from him in anywhere between 10 and 20 days, and obviously the sooner the better as far as he was concerned. When I get that disc, and it may be sanitized, and I'm sure you wouldn't mind that.
That's fine.
It may be sanitized, and once you get that, if you could take that time and give him a conditional, and even after you get the unsanitized list from him, the unsanitized disc, you will have built in standard time, or the 10 to 20 days that you're actually looking for.
That works.
I also covered with him some of the standard warranties that we always look for in portfolios like this.
In the event the person is not collectible, that would be deducted from the total price?
Not collectible. If he's deceased, then they wouldn't know it.
Good.
And you would have that period of that 10, 20 days to find all that out, and then we'd be able to take care of that.
Okay, that works, Larry. So pending the information that I need to get with the sanitized list, and also the collateral that's backing all of the debts, I can have that letter of intent out to you within 10 days of my review.
That's great. I look forward to it, and I will get this to you. What I will do is I have your email address, so I can email you the data, but I will call you on that first and let you know it's coming.
Sounds great, Larry. Nice talking to you, and thanks for the call.
Thank you very much, Randy.
Bye now.
Bye.
Presenting your services to a real estate agent. Henry Dvorkin of Associated Mortgage Company plays the broker, and Dow Stanley of Sunbelt Funding plays the real estate agent.
Good morning.
Good morning.
I'm Henry Dvorkin. Nice to meet you.
I'm Dow Stanley, Henry. My pleasure.
Dow, I really appreciate you giving me an opportunity to visit with you about creative financing this morning. Want to say one thing before we get started. I know that you see a lot of mortgage lenders and they come by your office. I'm not in the mortgage lending business, but we're in the mortgage note business, and we've developed a program to help you make more sales. Have you been missing some sales because of non-qualifying buyers these days?
Henry, as you know, that is a problem that we in the real estate business face quite often. Even with the low interest rates and the interested buyers that we have, because of the lower rates, we still have buyers that are unable to qualify for many different reasons.
I understand the average sale in this area is about $100,000.
That's correct.
And you make a 6% commission? That'd be $6,000?
Yes, on a house and lot sale, it's usually 6%. That's correct.
So every time you miss a sale, it's $6,000 out of your pocket, or at least money that didn't get in your pocket. Isn't that true?
That's correct.
If we could help you make a few more sales a month for you and everybody else in your company, would you be interested in learning more about it?
Henry, of course I would. I'm a little confused at this point. You said that you're not a conventional lender or you're not a mortgage broker, but yet you have some program that would assist us with some of these problem files that we were not able to close with conventional financing?
Let me give you a little quick summary of how our program works. Under our program, the buyer makes the normal down payment and the seller accepts a note for the difference in the purchase price. Normally the seller is not interested in accepting a note because there's never enough money involved in the transaction for the seller to accomplish their goals. But what we do is structure the transaction and then give a commitment to the seller that if they will accept the buyer's note, we will purchase some or all of that note in a simultaneous closing that occurs at the same time as the real estate sale. And thus there's enough cash on the table for the seller to realize their goals, for your company to make its brokerage fees, for the buyer to obtain the financing necessary to acquire the property. And what we're interested in, of course, is developing an opportunity for our company to buy a good mortgage investment. That's the way our program works.
I think I understand what you explained to me. This is new, and I haven't heard of this program before. But I want you to understand that typical reasons for a file not closing with our company could be one of several. It could be that the potential buyers have recently moved to the area, do not have stable work employment in this particular community. It could be that there's been some type of bankruptcy proceedings recently, or they could be, and this happens often, self-employed. And that is a real concern for a lot of our conventional sources. Would you still be able to utilize your program with some of these?
Yeah, we're familiar with all of those reasons. Those are typical Fannie Mae, Freddie Mac underwriting rules which disqualify a lot of buyers. Doesn't mean that they're not bad people, that they are bad people, or that they can't afford to make the payments. Because we have reduced our risk factor by investing less money than the leveraged financing that the conventional lenders offer, we're willing to ignore a great many of those problems and go ahead and invest in the mortgage note anyhow. Fundamentally, we're in the collateral lending business or purchasing business, whereas the bank is in the credit lending business. They look more to the credit and less to the collateral. We're more collaterally oriented. So unless it's a very, very serious problem, generally speaking, we can qualify somebody under our program for to make a deal work. Interest rate might be a little higher, terms might be a little shorter. There's usually a balloon payment due in 5 or 6 years, but by that time the credit of the buyer is improved to the place where they can qualify for bank financing and get a lower interest rate at that time.
This possibility is exciting to me because so many of the files that we do have, where we have problems with, are usually related to one of those 3 or 4 different problems that I mentioned to you earlier. Now, explain to me, it seems that we may be orienting this program strictly to single-family residential. Is that correct? Do you have any flexibility or any criteria as far as the types of property?
Yeah, our program is usually involves anything up to a 4-unit. As you know, beyond 4 units, 5-unit is looked upon as a commercial loan rather than a residential loan. We're primarily oriented toward residential purchases of notes.
Henry, let me ask you the question, is there some particular criteria that we need to maybe ask and determine certain criteria from our potential sellers to find out if some of these properties would qualify for your creative financing program?
Yes, a few rules of thumb. We like to have the buyer have at least 10% to pay down. Although we can structure transactions with less than 10%, it really facilitates matters if there's at least 10%.
Okay.
And as far as the seller is concerned, the seller needs to have an equity position in the property of 40 to 50%. For instance, a $100,000 house with a $60,000 old loan balance leaves a $40,000 equity or 40%. Anything much less than that becomes extremely difficult to work out the numbers. So an example, a house that they bought 2 or 3 years ago on a GI 100% loan will probably not have an equity position built up in it that would fit for our program.
Okay. That's very helpful. I think that will allow me to review my existing files that are pending, as well as any potential clients that come in to our office that we're having problems qualifying. That would allow us to know some of the parameters and criteria that you would require before we could call. Let me have the opportunity to review my pending files and go over this with my staff, and let us get back in touch with you in the near future.
Fine. I'll look forward to working with you.
Thank you very much, Henry.
This completes Series 1. Its purpose is to assist you in the development of referral sources through meetings and educating your referrals about the value of your services, which will generate new clients for you, maintain your referrals client relationships, and build consistent, steady business for both of you. It is important to conversationally chat with everyone you know about your business, since any of these contacts, friends, relatives, acquaintances, may very well be referral sources for you. Series 2 scenarios will guide you in situations where you'll work with both the seller or client and the buyer, funding source, or factor. This is often referred to as negotiating, although as you view these scenarios, you may perceive them as nothing more than normal conversations. True negotiations are conversational in tone, deliberate in nature, and provide solutions. These scenarios are designed to allow you to view how the process works from start to finish, to assist you in working with your prospect, and to learn the mechanics of funding sources. Throughout the study guide, we have indicated alternatives to some of the techniques you'll see. Watch carefully through the first time and then review along with the study guide to gain the best understanding of what you are seeing. Negotiating a simultaneous closing with a home seller. This is the continuation of the real estate scenario presented in Series 1. Henry Dvorkin of Associated Mortgage Company continues in his role as the broker, and Dow Stanley of Sunbelt Funding continues as the real estate agent. Marilyn Singer of Capital Funding Group and James Gripsover of